Welcome to FOMO Investing. I'm Brian.
And I'm Mick.
And we're a podcast focused on investing where we explore the various biases in investment decisions.
And what drives investment outcomes.
The information provided in this podcast is for entertainment purposes only. It is not intended as investment advice, so please do your own research.
Hey, Brian, how's it going?
Mick, we're not in the same room. We usually are.
No, we're not. Which gets
today?
us to try some video. Let's see if we can get video to go on this one. But yeah, I'm humming along. How are you doing?
Well played. What are we going to talk about today?
So you talked about this company, Humm Group. It's something I think you found through Twitter, right? This guy, Jeremy Raper.
Yeah, I mean, I follow a lot of these really great investors on Twitter. One of them is Jeremy Raper, who I followed for some time now. And he's a very successful investor. He's a credit style investor, as he would describe himself. I think he's actually evolved and is now maybe an accidental activist. Focuses on small cap companies, certainly sub $1 billion, I think even smaller, and tends to be in international markets like Japan and Australia. I think he's based in Japan now. But what's interesting to me about this story is he's brought to the Twitterverse, the Xverse, his activism against the Humm Group, which he thinks is very poorly managed. And the company itself is doing quite well, but the governance of the board of directors has been very poorly managed. And that's really his crux of his argument. And so he's put out a website. He's also put out some letters, describing what he would do in terms of affecting change. He's got plenty of skin in the game, which I certainly appreciate, owning about 5.7% of the company. He's partnered up with another shareholder. So the combined, amount is about 9%, I believe. And they've called a special shareholder meeting for the middle of February.
Yeah. I saw that. Yeah, that's, it's interesting. He's definitely, I went down a rabbit hole listening. He's been on a number of different podcasts through the years. He's been investing for a long time, right? He's been investing for 12 years. And I think he sounds like an accidental activist investor. I think we can link. He was on the Yet Another Value podcast very recently, outlining his theory of the case of the Humm Group and his activism there. And definitely, I think he's got very significant portion. Did he say $20 million in this deal?
Right.
I guess
so it's not too far under today's price. So the stock is 73 cents, trades on the Australian exchange. I think what's interesting is just sort of, there's a lot of history to this, and we don't need to get into it in terms of, the chairman came in and made a bid that was rejected. I think it was at 58 cents. That previously the stock was at mid 40s, and it was considered about a 25% premium. He was given 4 or 5 months to do due diligence, and whether or not he was on a standstill and was walled off is part of the question. The board has come back as of January 14th and put out a statement saying that he was walled off from those discussions, but he's sort of an insider and, clearly owns a lot of the stock. Then there was another bid that came in, and, Jeremy tells it very well in the Yet Another Value podcast, and certainly on his website, where he just describes some of the history. So I don't think we need to get into that, but I think what's interesting to it is, so where does it go from here? So we're about a month out from the shareholder meeting. 2 days ago, the company came out with a statement. Just yesterday, Jeremy recorded his, they released the podcast with what he outlines. But so where do we feel like shareholders would go? And what's interesting to me from, why we're talking about this as FOMO investors is just framing it for 12 loyal listeners, this is it's a situation of pattern recognition, and it's understanding this is a style of investing, and maybe this is something that you decide you want to dig into more, and we can get into that towards the end of this podcast, whether or not you're an investor here. But it's part of an understanding of what makes a great deal, and using that mindset of pattern recognition so you can understand a situation and reference it to a new situation that maybe more is in your wheelhouse. So the Humm Group is, and I think we should get into this a little bit, is a non-bank lender with two businesses, commercial and consumer. The commercial business does lending. It's a very healthy business that does quite well. And then they have this international credit card business with UK, Ireland, New Zealand, and Australia. And it competes against the pay later sort of credit.
Buy now, pay later.
Buy now, pay later.
I guess in the US, the big company is Affirm, but I mean, Affirm is more like tech, buy now, pay later. This company, Humm, is much older, right? It's like real leasing especially the commercial side. You're leasing hard equipment, and you've got it's not like a Peloton that you're trying to buy online and you're clicking a box. That's Affirm. This is, you're buying an MRI machine sort of thing.
No, I know people in the U.S. that do this. It's often it's in a very important business because a lot of these companies, especially I know in the healthcare space, don't have reliable financials, or they're not rated in a way that they can get access to bank lending, and so they need some of these alternative sources of capital to help them with equipment leasing and that sort of thing. What I will tell you is, both arguments certainly come out hitting pretty hard, and I think I'm trying to decide where I fall on this, but I do think that Jeremy makes some really good points. It does feel a little bit of David versus Goliath. They have blown him off. He's a smart guy. And clearly, whether or not the company has engaged with shareholders, outside shareholders, certainly he's a respected one, and tried to meet somewhere in the middle in terms of the feedback. I think that's kind of shocking to me that they've taken this approach to just saying, leave me alone. Like, we're running this company. When he's proposed things that are very specific in terms of the capital allocation. He thinks there's too much cash on the balance sheet. He'd like to see a dividend policy with a consistent payout. And I think that's what he has to do, is he's got to, prove that the balance sheet can safely fund aggressive returns, and be very competitive at the same time and not break those covenants that are required. And so his proposal, whether in really sharpening the pencil on that $45 million, I think that he sees as excess cash. The company kind of doesn't really answer that question, I think, in their response. They kind of say it might be too much. But I think if I was the company, it would be more productive to engage with that idea and say, well, maybe we can do 30, or maybe we can do 25 million. And we can, instead of doing a 75% payout ratio for dividends, maybe we can do something like 50 or something. But I think not all of his ideas are terrible. His ideas are productive. Whether or not that's the sharpen the pencil number, he's got to prove that. I think there's some opportunity between now and the shareholder meeting to maybe put out some more math on the numbers. But I think that's the way this could get resolved, in a productive way, that the stock would go up and the board would win. Now, he's looking to replace the three board members because he thinks it's beyond repair, right? He thinks Mr. Abercrombie, the chairman, who owns 30%, has acted in bad faith. He's not acted independently, certainly in his view, to entrench himself as the decider. And he believes that the other two board members are almost in a way just
stooges.
stooges to him, right?
Abercrombie's too. I mean, it's important to point out. I mean, Abercrombie, although he's the chairperson of the board, before he played a CEO role previously, and he founded the company. So this is your sense, Brian, from reading both sides, and I know you spent a fair bit of time here looking at like kind of the board response. Is there an opportunity to meet in the middle, or is this a my way, highway type of deal?
Well, I think there needs to be some, there's a lot of conversations that could still be had, right? In terms of what the tangible equity buffer should be, against minimum covenants that are required, talking to lenders, kind of getting a sense of that. I think that's one conversation, right? It's the response to what Jeremy and the shareholder group that's brought this proposal to the table, whether or not that makes any sense and whether or not there is a meeting in the middle. The second is, the stock has been undervalued, and that's, I think, indisputed. Like, if you look at the evidence that Jeremy puts forward in terms of what the company could be trading at, he thinks that, the reason why it doesn't trade and hasn't been re-rated to those numbers has to do a lot with their capital allocation strategy. And I think that the company very clearly cherry-picked performance data from the middle of 2022 and their response to say, hey, look, we're up 118% versus what the market has been doing. And so
pick the point where they're up.
Sure. Like, what's your And clearly the stock has gone up from the mid 40s now to 73 cents. But, the other bid that they received was, I think, 77 cents or something like that.
In the 70s. So like we're kind of at they received this third party bid in the 70s. So they're at that price now. I think largely because of some of the activism that Jeremy and friends have been doing, right?
Right. And so I think that there's, like, for me, I think that we have to understand sort of what does this company really want to be in the future, right? Maybe they decide that the consumer business is, it's marginally profitable. I think it takes a long time in that business. Maybe it's not the place where they can truly create high margins in the long run. And maybe that's part of what I think the board is considering. There has been some restructuring already, getting out of the buy now, pay later business, I believe, was mentioned in their response and some of the strategic moves that they have done. Because I'm early to the story, I think it's interesting to me from a standpoint of, like, it's very entertaining. Like, it's just entertaining to see a board and a shareholder go at it and try to understand sort of where this could play out. So, that's one of the frameworks that I'm looking at is does this process, it's almost like it's like merger arbitrage a little bit. Like, will the deal close? Will Jeremy?
It's a special situation. It's adjacent.
There's special situations, and you look at this. Will there be another competing bid for the company? And is the chairman going to be coming back to the table at a different number? Obviously, the like that to me seems to be like, we've seen the bids go up. We've seen the bids go from 58 cents to, the 70 cents. And Jeremy still thinks that there's even greater value here at 73 cents where it's trading in the public markets. For our 12 listeners, you can buy this company. It's a very small, thinly traded, about, what's the market value? I think it's like 350 million Australian.
Yeah, somewhere at 325, 350 million Australian
so you'd have
dollars,
to find a brokerage that could trade this. And, it's not without risk, but, to Jeremy's point, is he's, as a credit analyst, he's looking, so what could go wrong and what am I left with? And so he believes that that it's healthy and that it's producing cash and that it will be a successful company that needs to fix some things. certainly very frustrated. So where do you think this conversation is going from here? How do you think this plays out over the next month ahead of the shareholder meeting?
I don't know. My own view, and I'm not as deep into sort of the specific board response, is there's no meeting in the middle, right? So this shareholder meeting is about getting Jeremy and friends a board seat, replacing what's his name, Archibald, Andrew, replacing Andrew, who I think is a pretty strong accusation of self-dealing, because Andrew put this deal forward at a 30% premium to where the company was trading at, but after a significant exit of a major investor. And so it seems to my read, and I might be wrong, is there doesn't seem like there's a meeting in the middle. It seems like you've got Jeremy and friends versus the incumbents, the company, who have about 30%, and there's the rest, right? There's the rest of the shareholders, and the rest of the shareholders have to vote. Hey, do we trust Jeremy and friends or not? And I think for there to be tangible upside, Jeremy needs to win.
Right. Well, so I think our listeners can go check this out at the hummboardcleanout.com, which is Jeremy's website, where he spells out his case. And that's HUMM board cleanout. He's looking to enact fully franked special dividend of at least 15 million. Frank, that's interesting. Mick, are you familiar with that? That's sort of a new thing for me, which is that the company
fully
will
funded.
Franked is a way that the dividend can be paid in Australia, where they kind of try to avoid double taxation. So you get credit for, like, they're paying the corporate tax, and then you pay your personal tax. So you get some frank credits. So it brings down your effective tax rate when you file your taxes. It's kind of interesting. A 10% share buyback over the next 12 months, clarified dividend policy where they pay out at least 75% of cash earnings. And again, I think this is where, if I was the board of the Humm Group, I would try to say that some of this is actually pretty smart. Like, there's, come up with a payout ratio. Like, just come up with something that is more shareholder friendly. It doesn't feel that way yet. And I think that, they certainly had paid down some mezzanine finance. I think that he was talked about in his, in the podcast that he just recently did, where they could have issued a dividend to the shareholders, but instead they paid down some
of the debt.
Right. Restructure or exit. They want to, their loss-making Canadian operations. That's not maybe a bad idea, right? Because this is a company that's been around for a while. I think maybe if you're too thinly spread, maybe that's not where you should be focused on, especially when you're focused either in parts of Europe or in the New Zealand, Australia markets. Canada doesn't feel like it really fits. And then, I think that there's like a situation here where it's a long-standing board. They certainly could add some additional directors instead of clearly, I think there's one of the responses from the company was that it puts the company in a strategic disadvantage, going from removing 3 directors and only putting 2 in place. But I think maybe there's an opportunity here to show further good faith in terms of more independence, where and maybe Jeremy wants to do this too, where he could propose additional directors to expand the scope of the board, right? To expand the independence of the board, to bring the CEO onto the board, I think would be smart. That's kind of weird to me that the CEO is he's a new guy. The CFO quit in December. There seems to be this disconnect between what the board instructs and sort of how the company is operating. And I feel like that should be tightened up, if you know what I'm saying. Mm-hmm. I think the new CEO been with the company, and was promoted to that role, but it does feel a little bit like Big Brother is kind of, deciding at the board level versus letting the operating executive, right?
Yeah.
And there's just some other things just stronger governance in general and communications, but having, there's a board member that doesn't have equity. Like they kind of like this. There should be some alignment here. That's along maximizing shareholder value. And clearly, like, let's not pretend that like Mr. Abercrombie, wasn't aware that the stock was undervalued. And so, he was opportunistic in hopping on that.
He was being opportunistic in his bid for the company.
Right. And so, yeah, there's a generational thing going on here, which is, this is a very respected man who built this company to go into a chairman type of role where he just wants to be the overseer and not the operator. And now, like, if he's jumping back in because he wants to buy the company, like, that to me shows that he knows the story and he sees that we're not getting appreciated in the market. Not that he's doubling down and going back to be an operator, right? So I think he sees the opportunity from that for whatever reason they haven't gotten the respect over the last under his tenure. And so Jeremy points out that the stock has been down 80% versus when the market has been up. And these are good points.
Yep.
Right? So these are very good points in terms of stewardship. Maybe they finally have figured it out and they know what they need to do. But I'm totally on the underdog side here in terms of Jeremy. And I think it's about affecting change. And what does a win look like, right? The win looks like, because they're all shareholders, that the stock, well, except for one board member, the stock goes up, right? And does the stock go up because they implemented some of Jeremy's ideas? Is it because he got a board seat and implemented all this stuff? So maybe he's actually, the goal here is that a win doesn't look like him getting everything he wants, but he does get some of it. He gets to be heard. He gets some change affected in terms of the governance and how the capital allocation strategy is clarified, and the stock goes up, right? So if he can get a double on his stock in a short amount of time, and that's what I'm trying to understand here. So, we've studied Jeremy a little bit, listening to some of his podcasts and going back to 2020 and reading what he's published. I know you did some really great work kind of summarizing the Seeking Alpha articles. I've read many of them over the years. I think it's interesting how he's evolved, but what does a win look like is somewhere in the middle, according to, in my mind, right?
Interesting.
Because he doesn't have to win everything. He's not trying to be, this is not him, Jeremy, and I speak Jeremy broadly because he does have a partner shareholder. They're not looking to take over the company, and they're not looking to like affect some sort of merger. They're looking for a better capital allocation and governance strategy. And
maybe run a sales process. Maybe run a sales process, right? Like for some of the business.
I think that there's tremendous interest in these types of companies. If you can look at, potentially there's other ways that they could do deals, right? So that I think that there's this is a healthy thing for a company to go through. I'm kind of like, it does feel like a battle, like on both sides here. But like they all kind of want the same thing at the end, right? They all want the stock price to be higher.
Do they?
And well, I think so, because I don't see an interest in either. Like, well, unless they all regroup and retrench, right? Because that is a possibility that Mr. Abercrombie is retrenching. He's bought a bunch of shares in December, where he's increased his stake when he was allowed to, I guess, after the Credit Corp bid was announced. who's got deeper pockets, who's got partners who can jump in on these trades. I mean, that's kind of how this can work. I've seen it in the hedge fund space where they kind of rally up, right? They kind of rally up together, maybe not totally colluding, but like in a way that they all see the same thing. And so that could be an opportunity, but certainly like the sharpening of the pencils is part of this to understand sort of where they could meet in the middle. But if that doesn't happen, I think that there's a retrenching possibility. I think it's possible, like that there could be, I don't know, private equity tied up with either side to help get this affected in a way. So Jeremy talks about this real briefly, where they had a merger defense strategy at the shareholder meeting, and Mr. Abercrombie was going to vote against it. I'm sorry. He was going to vote for it. Sorry, for the company in response to the company.
But he switched last minute at the meeting. He switched
last minute. It was pulled off. And like there is some disclosure questions around that because, you've put out a statement saying that you are going to vote one way. And then when the shareholder meeting actually comes around, that's not actually what happens. It gets pulled off the docket. And so, like, clearly he knew where he was in his negotiations with the company. Maybe these are still ongoing. They could always resurface. Even the ones with the credit corp is still potentially ongoing. So I think there is going to be some drama, no doubt, between now and when we have this conversation maybe a year from now. And it'll be interesting to see whether or not, as a public company, the Humm Group recognizes its responsibilities to all shareholders in terms of communications and fairness and disclosure and just having a sense that they have a place at the table, if nothing else. And like, not all the ideas are bad. Like they're all trying to get better as a company, but I think it's about whether or not we sharpen the pencils and what can be defended, and having conversation with lenders, having conversations, doing some sensitivity analysis and really sharing that publicly in terms of their covenants so that you can understand the capital allocation strategy that Jeremy brings forward. So where are you on this idea, Mick? What are you thinking?
Look, this is way out east, I guess. Australia is east of us. East field for me. I'm not very non-banking financial companies. I don't know anything. I'm not too deep in that space. Australia sub $500 million. It's a totally different space, but this is a bit of a life philosophy for me, is follow weird smells. I also do, it's also part of my investing philosophy. I obviously have not deep enough, have not done enough diligence to say I have high conviction on this. But what I can say, from having done the research on this deal and on Jeremy, it's interesting. It's interesting to me. It's not a investing pattern where I have deep experience or expertise. So one conclusion there is you don't have deep experience, don't have deep expertise. To steal your line or Munger's line, it's too hard. It's too hard. Like, I don't know. Like, this is not my area. But I will say it's interesting. And so I'd consider a super small starter position just to follow the story. It's an interesting story.
It is an interesting story. So some of the takeaways I take from following this for the past few months is validating sort of both sides of both perspectives in this, right? So, Jeremy puts out some really good information on, what companies should be trading at for these types of deals, basically at tangible assets. And, these are frameworks that you can bring to other types of deals, right? So understanding sort of what the drivers of the business are, I think is key. And so are you a non-bank financial expert or not? Is this something you have interest in becoming an expert in? It's just like, it's sort of like you sort of have your expertise, but I think what you can do is you can apply it to, a situation where there's a public dispute between a minority shareholder and a board of directors, and then decide, actually, like, either way, I see the stock's is underappreciated here, right? So the stock's at 73 cents, and, is this potentially a dollar stock, right? And so when they lay it all out and they try to explain to you why something is undervalued, I certainly appreciate that. Like, Jeremy and Collins Street have partnered up on this to say, like, here's why we believe the company is undervalued, and here's some value enhancement strategies, some capital allocation strategies where we believe that we can create value for the shareholders. And a lot of that is, through dividends and buybacks and things like that. But I think that's interesting because that signals to me, whether that's writing somebody else's analysis and you're trying to validate that, right? So just understanding sort of like the work has been done. If you can validate it, get comfortable with it, say, well, actually that kind of makes sense, right? And see where the company is going with that. That could be interesting. But again, I think we're both not sort of, this is, Australian-based non-bank financial companies is kind of not what I typically look for, but I do like special situations, and special situations for me has typically been, trying to figure out what companies should be doing deals with one another, whether that's merger arb or just figuring out, well, clearly these two companies should be partnered up together in some way. And we've done some of that with our dealable episodes. So I find this to be very fascinating. I had a career in investor relations in two public companies, and I've seen sort of how activism can play into this. It's becoming a bigger part of markets is the activist types of investors out there, whether it's hedge funds or private investors, like Jeremy, or, just well-known names that are in this space that are trying to affect change. And you see it at the biggest companies in the world. And now we're seeing it in small cap companies. And so I'm certainly got to give these guys a lot of respect. Like Jeremy, and to come up with this public dispute as just one guy who's been very successful and put his own money and skin in the game to do this. Like I kind of do root for him. I think it's a learning opportunity for us, and then to see if it can be applied in other situations. But we'll have to keep following it and see how it comes out, and maybe do a little retrospective as to how it ended up playing out. My guess is that they're going to have to meet somewhere in the middle, though. I really do. Like, I feel like it's going to be maybe Jeremy doesn't get what he wants, but he's made his point. And that point is going to create benefits that will make the stock go up. For me, I don't know exactly where it should be trading if things play out the right way. So that's where I sort of trying to figure out sort of like, that margin of safety that you look for as a value investor, like where could this be? And if it's only, 20 cents or whatever, 15 cents on the stock, I don't know that I'm interested. But if it's a lot more, that's when I would start to get real interested. And I think that's the homework I need to do, is to figure out where is Jeremy's head with this, and where does he see the potential value. We talk about where it trades now. I think, was it 3 times EBITDA, 4 times?
Five
times.
I think the original deal, the original deal that they offered was at 3 times EBITDA. It's trading roughly at 5. And I think Jeremy's theory of the case is that, his comps say 10 or 1.2 times tangible assets. My rough math says it's roughly 50% upside from the 73 cents where it's at today.
Well, that sounds about right, because I think that would make more sense in terms of why it would be worth all of this. But the stock hasn't moved, which is kind of like it sort of did a little bit, but not really. It's still 73 cents. It's been sitting there. And so maybe it's a wait and see approach. The market seems to be wait and see. Again, this is so small, thinly traded and small that I don't think that, many are paying attention. The press has picked up a little bit of this. It's interesting. Certainly is interesting from, if they can do a 50% return in a matter of 3 to 6 months, I think that's pretty interesting. So
yeah, even a year. I mean, even if you, and my maybe I'm being too naive here, but the third party deal is kind of downside protection. Is kind of that's the BATNA, if you will, for the stock.
I mean, that's a good point. So Jeremy makes that point about BATNA in terms of what other possible transactions could occur. But yeah, there's definitely, that gives you a lot of comfort as an investor to know that there's at least 2 qualified parties who have made bids on the company. They see value. Getting the board, I mean, Jeremy talks about a full historic review on what has happened with the board's conversations. Getting that access to that information has been not fully disclosed, but I think it's starting to come out. And so whether or not they've rejected those deals, in part because they still think that there's better deals out there, it's part of a negotiation strategy, certainly, but maybe they're still like where they are. And this is what the company can do too, is like sort of where they are in their strategic plan in terms of improving the performance of the stock, right? So like the business is gone through some transformation, but it's still, the public markets haven't reflected it yet. And that's Jeremy's point. So if they could say we're 80% there, we're 90% there, and then we believe the stock should get re-rated, I don't know what that is going to take, but this is a company that's been around for a long time. So they need to do something better, right? Getting some coverage, getting some institutional participation. And I'm not sure that Mr. Abercrombie's been helping that in a way that he seems to be because it's so closely held, with him essentially controlling 30% of the stock, that I don't know that institutional investors have really seen that they are.
I mean, it's sub 500 million. It's 325, 350 million Australian dollars. There's my sense is he's been operating as, Grand Poobah, founder of the company.
Well, that's another question as to why this is even a public company. So maybe that's the exit. Why are they a public company if you're not going to act like one? And so your stock's at 73 cents. Maybe it's just, and maybe that's what Mr. Abercrombie saw along the way here, is that, we're not tapping the public markets. It's just a hassle for us, and we're not getting valued correctly. Let's go private and reemerge in a way, or go private, because like maybe you don't need to be a public company and you're
well, and then you don't need to deal with the Jeremy Rapers of the world. And
what would we talk about, Nick? Though we need to find some good ideas. Well, I think it's something we'll follow, and it's been fun to at least dig in and try to understand the story. And I think as we get updates, we'll update our 12 listeners.
Excellent. Fun as always, Brian.
All right. Have fun down there in Austin. Good luck with that run.
Thanks. Take care.
All right. See ya.
Bye.